please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
What was being speculated for days finally turned into reality on Thursday. US President Donald Trump signed an executive memorandum that would impose tariffs on Chinese imports worth up to $60 billion. Is this the start of a global trade war? And is India prepared to weather this very storm? Good evening and welcome to this special broadcast. I'm Kritika Saxena and with me is Ronojoy Banerjee. Ron, interesting turn of events in the last 24 hours.
Well, as Nomura said in their note earlier this evening, Kritika, that Trump's bark turned out to be worse than his bite. Well, now America now claims that the tariffs have been imposed in retaliation to unfairly acquired U.S. intellectual property by China. The tariffs have been imposed following an investigation of Chinese policies ordered by U.S. President Donald Trump in August last year. Donald Trump claimed the tariffs would, and I quote, make U.S. a much stronger, richer nation. According to U.S. government officials now, United States Trade Representative will be publishing a list of targeted products in the next 15 days. Trump's latest move has spooked markets across the world who are now viewing it as a trigger that could escalate into an all-out trade war between two of the world's largest economies. Meanwhile, Wilbur Ross, America's Commerce Secretary, however, told CNBC earlier today that he does not think there will be a trade war with China resulting from President Donald Trump's latest tariff. Have a look.
We have right now an $800 billion trade deficit with the world. So think of that. So let's say we have 500 to 375, but let's say we have 500 with China, but we have 800 total with the world. That would mean that China is more than half. So we're going to get it taken care of. Just use the word reciprocal. If they charge us, we charge them the same thing.
There you have it from the president. Mr. Trump has announced $60 billion worth of tariffs on Chinese imports. He said it was the first of many measures, designed to penalize China for practices that include stealing of American intellectual property. Now, despite praising the relationship, as you heard there, between his administration and President Xi, Mr. Trump said he will consider further action in 2 weeks' time.
We will be joined by a stellar panel in just a bit. Jim O'Neill, former chairman of Goldman Sachs Asset Management, Jan Das Gupta, former envoy of India to the WTO, and political and economic affairs expert N.R. Tangen. And of course, our very own Shireen Bhan will be joining in to take us through that discussion. But before that, Ron, how is India responding to this?
Well, so far, Commerce Minister Suresh Prabhu has said that India remains in a wait-and-watch mode as the trade war escalates. Speaking with the media, Minister Suresh Prabhu said that India will respond appropriately if it faces any unilateral action by any country. Meanwhile, former RBI Governor Raghuram Rajan has warned that this crisis could indeed derail the global economic recovery.
India is a firm believer in a rule-based, transparent, participatory trading system. And to ensure that it happens, it functions properly, we had invited 53 countries and they have again appreciated India's role into doing that. As we are doing it multilaterally, we also do it bilaterally. We honor all our commitments and we live by the letter, not just letter, by the spirit of it. If any countries take any unilateral action, we'll definitely have taken note of it and will deal with it appropriately.
There are very worrisome scenarios here, so I think we should not take this lightly. I do hope that better sense sort of prevails and we move off from a full-fledged, process of one country doing it and the other country reacting and so on. I don't want to use the word trade war. I don't think we are there yet. But I do think that it's very important that we stay away because it could harm the current recovery, which has been beneficial all over the world significantly.
Raghuram Rajan says that the current recovery could be affected if this does get into a full-blown trade war. So the questions here are, will this escalate into a full-blown trade war, or are we in the middle of one already? And more importantly, is India really prepared to tackle if such a situation really arises? To take this discussion forward, we are now joined by Shireen Bhan, live from the Global Digital Summit in Kerala. Hi Shireen, over to you.
Well, thanks very much, guys. Yes, we're now joined by Jayant Dasgupta, the former Indian ambassador to the WTO, and political and economic affairs commentator Inar Tanjan. We'll also be joined by Jim O'Neill, the former chairman of Goldman Sachs Asset Management, in just a bit. But Mr. Dasgupta, you know, there's two camps. One camp that believes that President Trump's bark has been worse than his bite. There's another camp led by people like Raghuram Rajan who are genuinely concerned and believe that we shouldn't take the actions that the Trump administration has taken lightly. Which camp do you belong to?
I think it would be very difficult to, belong to one camp or the other. But I would subscribe to the notion that whatever President Trump has been announcing in the recent past, especially in relation to the escalation of tariffs on steel and aluminium, I don't think it has been followed through to the last word, because President Trump just yesterday, I think, has exempted 7 countries, the European Union, Canada, Mexico,
yes,
Brazil, Argentina, Australia, South Korea. So that takes about 67% of the US imports of steel. So effectively, only 1/3 of the US's steel imports are going to be subject to tariffs from midnight today, US time. So I think the announcement which was made right at the beginning, and then the soft pedaling a little bit, that shows that President Trump probably will bow to reason and wiser counsel from his advisors, and he will not take it to the ultimate point.
Well, except that his advisors keep changing every single day. Today we've seen the National Security Advisor change, but let me go across to Inar. We've seen China say that, look, we're going to retaliate. $3 billion worth of tariffs is what China is looking at this point in time. But given the fact that, as Mr. Dasgupta pointed out, we saw the Trump administration now providing those exemptions to a lot of the allies, do you believe that this is, in a sense, the US's way of getting China to make some compromises, and you believe that this is going to reconcile at some sort of middle ground?
Well, it's hard to tell the future, but I think you have to keep some other things in mind. First off, when Trump announced the steel and aluminum tariffs, understand that China is the 4th largest exporter of aluminum and isn't even in the top 8 of steel directly to the United States. So it would seem kind of odd that he was shooting his friends first in an effort to target China. But he loved the idea and the result. When he announced that, it changed the conversation in Washington away from a lot of the troubles he's currently facing. And it did something else which really boosted his ego, which is all of a sudden all of these trade groups, all of these countries, leaders, everybody was calling Donald Trump. And this is something that very much appeals to him. He likes to be the man in charge. He likes to be the person who's calling the shots. And he's very amenable when you approach him on a one-on-one basis. He says, "Oh, what can we do?" He's a deal maker, and he senses that. But he wants something in return. He says, "Well, you owe me one," this kind of stuff. So the other part of this is that this really he needs to get away from this conversation that's going on. And, he has 3 women who are accusing him of sexual things, and 2 of them say that they slept with him, had unprotected sex. I mean, it goes on. It's a tabloid version. Then you have Robert Mueller on the other side, who's closing in, saying that he wants to interview Donald Trump. He's sent him a list of questions. There's the turmoil in the White House itself. So in terms of China, China is only responding with the $3 billion to this first foray. That's the steel and aluminum tariffs that we're thinking. We have not seen what they're going to do with the $6 million. We have 15 days to figure out what the U.S. is actually going to do, but I can almost guarantee you that China will respond leg for leg on this particular one, because they can't afford not to. They don't want to be seen as weak, as accommodating Donald Trump. They're more than willing to sit down, but if he wants to start a trade war, it's going to get bloody.
Do you believe that the WTO is relevant at all in the manner in which the Trump administration intends to go about trade?
Well, this is the big question that everybody's wondering about, and this is something that affects India in terms of how they're going. What is the world going to be like without the WTO? I mean, India and China and many other countries, ASEAN, have been experiencing very wide growth. There's a massive move of GDP. 2001, the world GDP is $50 trillion. You go forward 15 years, it's expanded to $112 trillion. And most of that growth did not come for Europe and America. The largest growth was for all the rest, not just China. So the WTO was very, very beneficial. If the United States has, and it seems that it's decided that the WTO was unfair, just like NAFTA is unfair, the UN is unfair, climate change is unfair, anything that is not solely dominated by the U.S. is unfair, then you have a real problem. And this is not just going to be China's problem. It's going to be everyone. It's because Europe still adheres to the WTO. They believe the trade is good. The only one who's really saying that they don't like this, they want to take their ball and go home, is the United States. The question is, will the rest of the world suddenly say, look, you know, there's a rising China that's, 15% of GDP that's growing at 6.5% to 7% a year. You have India that's growing. These are the big markets. Why do we need the U.S.? And this is the real danger for the U.S., that it becomes marginalized by its own actions, by radicalizing this thing. Already, Trump has proven himself to be a very unreliable partner. That's according to his closest allies. So it's very hard to see. In diplomacy and business, reliability is key. You cannot plan if you don't know what the other person's going to do, and you can't predict it. And this is one of the issues with Trump.
Yeah. Well, that certainly is one of the issues with the Trump administration. Jim O'Neill joining us as well. Jim, one, of course, is the fact that, you know, a tweet a day changes the perspective that the United States has and the Trump administration has on many issues, including trade. But I want to ask you now, given what we have seen them announce when it comes to measures against China, and Wilbur Ross telling CNBC that this is only the first set of steps and more action will follow if China were not to comply with what the U.S. is looking for, which could include things like production cuts, etc. What do you foresee, Jim, from here on?
Well, to be quite honest, I'm not sure. As we see virtually every week, trying to figure out what this US president is going to do about virtually anything is close to impossible. Quite where he's getting his economic advice from, I have no idea. It's kind of crazy. A lot of the issues that they try, and it's almost definitely for some domestic social media audience rather than to have a sort of economic impact and genuinely thinking about the health of the future of the US economy, because the kind of issues that they focus on are about 20 years out of date. I mean, we live in a world where the most highly valued American company, Apple, sells more iPhones to Chinese consumers than US consumers. This is a sort of ridiculous thing for the United States to do, in my view. Doesn't make any sense.
Let's assume that he intends to follow through with what has been announced. So far, and we don't know whether we'll see a tweet tonight or maybe over the next few hours, but let's assume that he goes through with what has been announced so far, which is $60 billion that the US is announcing and $3 billion which is what China intends to retaliate with. What impact is that likely to have as a first step?
So I think just as I just heard the end of the previous guest you was chatting to, I sort of agree. The underlying issue is the bigger one. I think is the initial impact. It's not going to be much. Part of why I said this is 20 years out of date. China's overall current account surplus is about 1/8 of the size it was 10 years ago. It's less than 2% of GDP, and their exports to the United States are much smaller as a percentage of GDP than they were 10 years ago. And linked to your own country, India, where we are slowly moving to a world where the United States doesn't dominate the world economy or world trade. So this is essentially almost shooting themselves in their own foot. It's sort of, you know, it's crazy. I just don't get. You know, 30 years ago, maybe, but today it's just a sort of gimmick that isn't very sensible, but obviously upsets the financial markets because who knows where it will stop. And I am assuming that you won't have other more rational countries trying to do the same thing between China and themselves, because that would be of much greater concern. But in some ways, this is essentially isolating the US, as we see on issues to do with climate change and no doubt some other issues too. It's kind of crazy.
Well, Jim O'Neill, Jan Dasgupta and Einar, we'll have to leave it there. Appreciate you joining us here to discuss the implications of the action that Donald Trump has decided to take against China and what that could mean potentially for the global economy and whether we are in fact in the midst of a trade war.
Well, let's understand the equity market impact. The escalation in trade tensions took a toll on U.S. equities in Thursday's session. So U.S. markets witnessed sharp cuts. Today, Wall Street is trading flat with the Dow marginally in the green and the S&P trading almost unchanged, fairly in the red with a little bit of a negative bias. Nasdaq is trading with cuts of about 0.2% as we speak. And back home, it was a sea of red on the Lal Street as well, as Indian equities slumped to the levels last seen more than 5 months ago. So the Nifty, for instance, opened below 10,000 mark, and every attempt by the bulls of recapturing that 5-digit figure was thwarted by the bears. The Sensex faced a similar fate and closed with cuts of over 400 points. The broader markets underperformed as well. Mid-caps ended 1.5% in the negative, while the banking index tanked almost 2%. Anuj Singhal is here with a wrap of today's trading action. Anuj, global headwinds clearly hitting the Lal Street very hard.
Well, bad day for the markets. The bears are clearly tightening their grip. You could argue that it wasn't as bad as the rest of the global market or that the market recovered intraday, but really that was nothing. The fact is that the market is below 10,000. Banks are weak. Metals are dragging. Obviously, IT stocks sort of capped the losses, but overall, it was still a weak day. What is wrong? Of course, there's a US-China trade war, liquidity pressure as we go into expiry and March end. Also, the domestic concerns of late, what's happened domestically is also not going down too well with the investors. Big banks were down, Axis, ICICI, SBI, stocks like Larsen, Tata Motors, Reliance, all the metal stocks put quite a bit of pressure on the market. And of course, in the F&O space, you had names like Union, Fortis, Syndicate, SAIL, IDBI. The list is long actually. All in all, this is a market which is now in a firm grip of the bears. Next week is expiry, and it looks like the bears are in no mood to relent, and it's possible that a move towards 9,700 is a high probability even now.